G'day ladies and gentlemen, welcome back to another Bitcoin video. Short little update today, not really too much to discuss going into CPI in just about 48 hours, a little bit over 48 hours. But I do want to quickly give a shout out to the Wolves Crypto Community Discussion Telegram group. It's a completely free group to join, discuss the markets 24/7 with other people. Anything to do with cryptocurrency, anything to do with stocks, anything like that, you can discuss it 24/7 with members of the Wolves Crypto Community. So go ahead and sign up to that. It's not even a sign up, just join, completely free. Regardless, let's get into it. I wanted to start today by quickly just going over what's actually happened in the last 24 hours, and that is the weekly candle close. We have seen the weekly candle close. We've seen a def cross that's occurred on that weekly candle close. This is the first time we've ever seen a weekly chart def cross occur in Bitcoin's entire price history, which is interesting, and I've discussed this a couple times over the past month or so. I don't think it's as big as a deal as people think it is, and the reason being is because def crosses occur as a result of price action. They do not necessarily lead to price action. They are just indicative of current trends. So no, I don't think the weekly def cross is a massive deal. I don't think def crosses in general, or golden crosses, or any kind of moving average cross is a big deal in general. It is, of course, a slightly bearish indicator. It's not bullish, we can say that. But for the most part, it's just the result of the current price trends. And it's a result of diminishing returns, right? Because look, these moving averages, the 50-week SMA and the 200-week SMA, got very close to each other on multiple occasions in the previous history of Bitcoin, especially during bear markets. And now that we've seen diminishing returns, in which we haven't seen as much of an upside gain, we haven't seen the 50 moving average, deviate that far away from a 200 moving average like we did in previous bear markets. And hence, when they do come together, this time it's led to a cross, and that's not a result of anything unique. It's just a result of diminishing returns. So no, I don't think it's a massive deal. But again, obviously it is a slightly bearish thing, and that does actually the main thing I'm actually looking at in regards to def cross is the fact that that's a conglomerate of resistance now, because these two moving averages weren't as close together ever historically as they have been now. And so now when we go up to test that region, those two moving averages are going to act as individual resistance zones together in one place, making that resistance even stronger. For that reason, the 25k resistance for Bitcoin is very, very strong. We've kind of seen that play out a little bit as we got very close to that 25k region. We started getting rejected quite heavily. We started rounding out in the price, and that's why we've seen kind of this slowdown on Bitcoin. Also due to the fact that we've just seen a massive rally and we haven't really seen any correction due to it. But we have seen some sort of correction. Look, we've come down from 24.2k down to this 21k level, and right now we are holding support. And the main structure I'm looking at for Bitcoin right now, especially the structure that I'm looking in going into CPI, is what we're seeing right now, which is actually a descending wedge formation, a descending channel formation, which is two yellow solid lines, kind of almost parallel. So I guess it is technically a wedge. They're coming together quite close, and we're going to see a breakout at some point. And the reason why I say that is because right now what you can see is that this red support line at 21.6k, which we held as resistance back here in January, is now acting as support. And so right now, what's actually more relevant is the top downtrending yellow line compressing the Bitcoin price against the horizontal line. And so what we're seeing now, if I go ahead and delete everything else, I can very easily display this for you visually, is almost like a descending triangle formation, right? The price is compressing between this support and this resistance, and eventually it will lead to a breakout. Now, that pink vertical line I have on the screen here is the date and time of which the CPI decision will happen. So I am expecting personally a break to the upside or the downside at CPI, either below 21.6k or above that yellow resistance line. If we break above the yellow resistance line, that will be an indicator that we're going to see a move to the upside, possibly a retest of a downside of this resistance line here, this dotted resistance line, in which case, we might actually reject further and just go down further in the future, or we could be seeing a straight up breakdown and another retest at the bottom of this channel. Do I think that Bitcoin is in need of a further correction? Yes, I do. I made my points on this very clear in yesterday's video. I do think Bitcoin is in need of a further correction. What I said yesterday was essentially this. I said that I think Bitcoin needs a further correction, but as of right now, seeing as we're so close to where the top supporting line of this wedge is on the weekly chart, this pink line, I think we need to see some consolidation first. As of right now, if we were to drop on Bitcoin, the lowest we could possibly go, assuming we don't break back below the wedge, right, would be around 21k. So that's the lowest Bitcoin can go this week, in my opinion. I don't think Bitcoin will go below 21k this week. And yeah, that's basically my opinion on Bitcoin in the short term. I think that weekly wedge is very, very strong support. I think give it another week or two of consolidation sideways, and then we could potentially see a full correction, in which case we'd go downwards towards a 200-day SMA, this green line here, which is sitting on a horizontal support zone around the 2017 all-time high at 19.5K to 20K. So ultimately, just to summarize, Bitcoin will probably correct further, and eventually we do have a chance of coming down to that 19.5 to 20K region, but I don't really see Bitcoin going below that. I think that as of right now, I think that the lowest Bitcoin could possibly go is probably that 19.5K region, maybe 19K in a wick. But other than that, I think Bitcoin's in a very strong position in the macro. I think the macro is holding true. I think the macro strength is very strong. Perhaps a little bit more correction, as I said. But, look, we're going to have to wait and see what CPI brings. We're expecting a 6.2% CPI, which means a 6.2% inflation rate year on year. There have been murmurs. And there has been a lot of actual news, I should say, of they're changing the method of which they calculate CPI, and this isn't uncommon. This happens all the time. They do this quite regularly. Obviously, the way they calculate inflation has changed dramatically over the past few decades, and that's mainly to make inflation look better than it actually is, and there's no doubt about that. But even with that said, I don't think that's of a concern to us as swing traders and traders, right? Because the main reason the price moves up or down upon CPI release is because the CPI comes in higher or lower than the market's expectations. The market is already basing its expectations based on the new method of calculation. Therefore, it doesn't affect us what the new CPI calculation doesn't affect the market. What matters is whether or not the market's expectation is wrong or not. So we'll see. We'll see what happens there over the next couple of days when that CPI release occurs. Ultimately, total cryptocurrency market cap at this point in time is still on support. Ethereum still on support. The DXY is on support. It looks like it might actually break to the upside, which does actually give us further reason to believe there might be a further correction on Bitcoin. But at this point in time, I did want to make this video quickly to say that Def Cross has happened. And I did want to make this video quickly to say that now that the Def Cross has happened, and now that the weekly candle is closed, and the support that's holding up Bitcoin being this wedge line has moved down further, the lowest we can go on Bitcoin in this week and remain a healthy macro structure will be around 21K. And so I think, yeah, that's probably the low. If we are to go down, if we are to correct on CPI, I don't see that correction going below 21K on a weekly candle close. That's probably the lowest point in which we can see that next weekly candle close. So for everyone thinking we're going to be seeing a massive crash this week because of CPI and because of the Def Cross, I simply disagree. Again, we could go down, and that's fine, and we probably need to, but it won't be this dramatic crash that's going to take us downwards, way, way down, like for example, the rally upwards was. It won't be to that magnitude. But yeah, just saying quickly once more, if you're really concerned about Bitcoin short term, you're really concerned about short-term price action, and you want to catch the next move, what you would essentially be watching is this. On a 4-hourly chart, you would be watching 21.6K, because if we lose that, we'd go down and test the bottom of this channel, which could be a bit lower at 21K. And to the upside, you'd be watching this downtrending yellow resistance line, and if we break that, we come up and retest this dotted line as resistance. So that's what you need to be watching. Again, sorry to not bring you much analysis today. There's really not much analysis to do, and sorry to be a little bit vague in terms of predictions. There's really not much evidence to support any stronger terms of predictions, but I thought I'd give you this quick little update anyway. Tomorrow I will be releasing a video before CPI to cover any of the price action that might have occurred before that point, and then obviously after CPI I'll release another video to cover what happened with CPI and where the price would be after that point. So yeah, not much to talk about today, but that's essentially it. That's what you need to be watching. So I thought it was worth making a video on that. Go ahead and sign up to the Bitget Exchange. Partnered with Wolves of Crypto, 5 times lower fees than the Binance, got a protection fund, they've released the reserves data, etc. And I recommend signing up here using my referral link for a 15% discount on fees. And then if you want to learn how to trade, want to learn how to do market analysis, the Crypto Academy courses is the way to go. We've got a Become a Trader 10-unit course that teaches you how to trade, teaches you how to analyze charts and everything like that. And you can check out that website in the pinned comment and description link below. So thanks for watching, guys. Hope you enjoyed. Short little video, and I'll catch you in the next one.